Hi traders and welcome, Lockie here for TTP. We are going to be doing a quick introduction into CFD trading. As the beauty of CFD trading is it gives you the opportunity to trade many different markets around the world. You can trade both up and down. And there's a long history to CFD trading. In fact, just prior to me becoming a full-time futures trader, as in 2007, I was actually a full-time CFD trader. So let's build into this topic of CFD trading, ladies and gents. We'll inform you about CFDs and we'll get on with the job of getting you funded as professional TTP traders. Now, the term CFD stands for contract for difference, and it's a super popular way to be trading the financial markets around the world. Now, one of the key advantages to CFD trading is that you do not need to actually own the physical asset, for example, gold, to take advantage of the value of that gold. So in simple terms, as a CFD is a contract between you and a broker where you agree to buy or sell something with the intent of paying for it in the future. Now, as the name suggests, as the difference between the price you buy it and the price you sell at is the profit you keep. Now, naturally, as we can also short sell the CFD market as well, meaning that if you sell something, you want to buy it back in the future, naturally, you're going to be keeping the difference as well. Now, you can trade a wide range of asset classes from stocks to commodities to Forex to stock indexes, as without ever actually owning them. You can also trade the market both up and down using a CFD, as there is a little bit of a catch involved that we're about to run through, but suffice to say, the fact that you can trade up or down, as you can do so over multiple asset classes, is one of the reasons why CFD became very popular. As CFDs became very popular in the 1990s and early 2000s. Now, that being said, ladies and gents, if you do want to buy a financial market using a CFD and you do want to hold that position for more than 24 hours, just be a little bit careful here because you may need to pay interest on the position, and that interest is actually going to be to the CFD provider. Now, you're not actually paying interest on just the amount of money you've put into the trade. You also may be paying interest on the leveraged position as well. So you're actually paying interest, if you will, on the entire position. Now, the flip side of that, ladies and gents, is if you want to short sell the market or take advantage of the market as it falls using a CFD, as what you might find is your CFD provider will actually pay you interest as a thank you for short selling the market. Naturally, that interest will be paid on the entire size of that CFD position, not just the money you've put into the trade. Now, mind you, ladies and gents, the presence of this interest payment does add a degree of complexity to CFD trading, and as such is something that you must consider as a professional trader if you're going to master as the art of CFD trading, if in fact CFD trading is your vehicle to professional trading. Now, some basics on CFDs, ladies and gents, which are all very important. First thing about CFDs is you will be trading on leverage. Now, what does that ultimately mean? As you will be borrowing a little bit of money every time you take a trade. What does that ultimately mean? You may put in a very small investment, but your market exposure could be significantly larger. Let's say, for example, you're using a leverage of 10 to 1. It simply means that if you put $1,000 into a particular trade, you've actually got a market exposure of $10,000. Now, as much as this leverage does amplify the risk on the trade, it also amplifies your potential profit. And this is one of the reasons why CFD traders, very much like futures traders, are ultimately professional risk controllers. As we want to cut our risk quickly, we want to let our profit run as far as we possibly can. Now, also, as I mentioned earlier with CFDs, you can trade the market in both directions, which is a massive advantage when you compare CFD trading to more conventional kind of BHP or buy, hold and pray style traders. So we can make money when the market goes up. We can also make money when the market goes down. Key point, ladies and gents, we've got to make sure that we understand there is an interest charge for trading the market up, and you also may be paid interest, guys, by your CFD provider or broker if you are short selling the market. When trading in CFDs, you don't actually own the underlying asset, whether it's a stock or a commodity or gold or silver, oil, whatever it is that you're trading. Now, instead, as you're simply speculating on the price of the market for a short period of time with the intent that the market either moves up or down in your favor, whichever direction you decide to trade the market. Now, costs and fees, ladies and gents, as a CFD trader, sure, you've got the flexibility to trade the market both up and down, but there will be costs involved. Now, naturally, you're going to have a brokerage fee for entering and exiting the market. You've also got to cross a price spread, which is introduced by the broker in order to exit and also enter the market. And finally, ladies and gents, you'll have your overnight financing fees if you have bought the market. Naturally, if you've sold the market, your CFD provider may actually be returning a degree of fee to you. Now, guys and girls, when it comes to costs and charges and fees, this is why some people do find CFD trading a little bit more complex than other disciplines, for example, like futures trading, where we don't have any of those fees included. Now, guys, more on CFD basics. When it comes to risk management itself, guys, like all forms of trading, CFD trading does involve risk. Because of the leverage, the potential for both gains and losses are actually quite high. Ultimately, what does that mean? We become professional risk controllers. We use a stop loss to limit the amount of money we can lose on a particular trade, and we're always seeking to let our profits run as far as we possibly can. Now, please note that if you are going to trade CFDs, you will need to use a CFD broker, or otherwise known as a CFD provider. Now, that being said, ladies and gents, I just want to warn you, if I can, that not all CFD markets and not all CFD providers are ethical. Now, that said, CFD providers actually control the price of the market you're trading and may, in time, if they're unethical, choose to manipulate the market against you while you're trading. Now, they use the price spread of the market in order to do this. What it ultimately means, ladies and gents, if you do want to be a CFD trader, please do your research and also make sure that you're using a reputable broker or CFD provider like TTP as when you're starting your trading journey. Now, a key theme to consider, ladies and gents, which I do believe is really quite important, around about 20 years ago, futures trading was not actually available to mum and dad traders globally. Hence, these traders, like me more than 20 years ago, was actually forced to use a CFD. Now, ultimately, if we wanted to trade the market using leverage, we wanted to trade the market both up and down, and we also wanted to trade the markets without actually owning the underlying asset. Guys, CFDs were actually the only option for us in the late 90s and early 2000s. Now, fast forward to today, ladies and gents, almost every market that is worth trading globally can be traded using either a futures contract or a CFD. Now, this gives you an absolutely wonderful choice as to what style of trading you may seek to master. Guys, now I note that TTP have introduced a series of world-leading futures challenges as well as CFD trading challenges. So ultimately the choice is yours and you get to take advantage of both styles of trading. Guys, just depending on whether you want to get a little bit complex with the CFDs or keep it really simple in the game of futures trading. Now, in conclusion, if I may, ladies and gents, CFD trading offers a flexible way to trade various financial markets with leverage, allowing you to profit from both rising and falling markets. Just be aware, though, that there are risks involved, not only due to the leverage, but also the presence of brokers or CFD providers. Now, a little tip, if I may, ladies and gents, beginner traders should start with a demo or practice account and prove their profitability for at least 3 months before trading with real money. Always ensure you understand the risk of trading a CFD with a broker and have a solid risk management strategy in place. Now, that said, ladies and gents, where to from here? The beauty of TTP is when you do start your CFD challenge, should you choose to be the master of CFD trading, you are trading in simulation. So you can't offend anybody if you make a mistake. And I believe that's a really great platform, guys and girls, for you to learn how to trade this beautiful thing called a financial market using a CFD. As I've alluded to in the video, TTP offers world-class challenges for both CFD and futures trading. So ladies and gents, whichever discipline you choose to master, I wish you all the best of luck. I do hope that you have enjoyed the video. I look forward to hearing about your funding process as you roll through the process. And may I suggest, ladies and gents, that funding through TTP is a game changer for both novice traders and professional traders alike. I hope you enjoyed the video, and I look forward to your ongoing success with TTP.